Well, this morning, the stock market under pressure again as the war in Iran continues to shake global economies. Rising oil prices and fears of prolonged conflict are really driving volatility. And also with the S&P down several percent this year and investors bracing for big swings. If you are close to retirement, what should you do right now to protect your money without panicking? Let's search for answers right now with April Reed-Cruz, co-CEO of Reed Financial Group. All right, April, so tell us, bottom line, this is a moment to act or a moment to just kind of sit tight?
It's a good moment to reevaluate and make sure that you are in a risk appropriate position. Make sure that you've evaluated your time horizon and that it's appropriate for how far you are from your retirement as well. We're seeing a record number of people dipping into their 401ks, and that's another conversation perhaps for another day, but people are struggling right now.
And so does this matter if you dip into it or not for the people who, let's just say, a little bit younger, but they have some significant savings because they've been working since right out of college? Or is this a different story for people who are close to retirement? Who should dip, who should not, or should no one dip?
Well, there are certain scenarios where it can make sense to, especially if you're looking at a scenario where you might have no choice but to tap into the 401k or drive up very high interest on credit cards. And that is an assessment that has to be made individually. We're seeing accounts at highs right now, so I think it can be a little bit tempting to dip in, especially as expensive as the cost of living has gotten. The cumulative inflation since 2020 has us up about 26% from where we were. People who are closer to retirement have more options. If you're 55, you might be able to access your 401 without a penalty. You should look at hardship with penalty exceptions that now exist post-Secure Act, and also potentially a 401k loan instead of drawing funds, but also making sure that you're assessing the long-term impact of those distributions on your future retirement.
What's the biggest mistake you're seeing people make during this downturn right now?
Emotional decision making when it comes to risk-based assets. So a lot of times when people get scared, they make knee-jerk reactions based on emotion and opinion and not for a fundamental reason. People tend to you want to buy low and sell high, but human nature is the opposite. A lot of times we let emotion drive that decision making, and when volatility enters, we'll sell, and that can really help us lock in losses. So make sure that you have a strategy and you assess it very carefully before making emotion-based decisions.
So this downturn is tied to war and oil prices. You think that makes it more unpredictable than like a typical market drop?
It absolutely does. Anytime there's geopolitical tension involved, it does make it a lot more unpredictable. And a lot of what drives that is the fact that markets often move based on exactly what we were just talking about, emotion and opinion, instead of a fundamental reason. But it definitely can make it more unpredictable, and that's why it's important to stick to your plan.
Historically, we do know that markets bounce back, but how long does it usually take after something like this?
Actually, the news is good. Usually, after something like this, markets typically rebound very quickly. And that's one of the reasons why it's important not to sell based out of fear for something that's very likely to be a short term.
All right, so for people who actually check their retirement accounts quite frequently and maybe they're kind of freaking out a little bit, what's your advice to them this morning?
Talk to a professional and have some metrics to really gauge what's going on right now. Make sure that you have some historical perspective. Oftentimes it can be very scary when we're hearing geopolitical tensions and a lot going on in the world. We're concerned about the cost of living going up. We're worried about what might happen in the short term, but we need to look at the long-term picture, make sure that we have a professional to talk to and specific metrics to ensure that we make wise decisions.
It's funny, I'm total opposite. I don't want to see it. I don't want to know. Out of sight, out of mind. Until things settle, then I'll check back in. All right. In one sentence, we got about 30 seconds. What's the smartest thing someone should be doing?
Stick to your long-term plan, reevaluate what you're doing as far as spending. It's the cumulative inflation that's really getting people right now. It feels like it's these short-term headlines, but it's really that cumulative inflation. Take a close look at what you're doing, hold yourself accountable.
All right. Thank you so much. We enjoy having you here. We'll see you next time.